Well, howdy there, folks. Welcome into today's video. I was just thinking about the stock market, whole situation of the financial markets this year, and I feel like, man, Hollywood couldn't have scripted it this perfect. The way everything is played out, the order of detail on how all these things have gone, the process, and how orderly everything has been, it is almost like a movie script. It is so perfect, okay? And we're going to go over this in today's video, okay? I'm also going to talk about how long this final stage of the market, let's call it collapse, whatever you want to call it, how long this is going to last for, and where the opportunities are at in this final stage, which I think is very important for everybody to understand as we kind of move throughout this process over the next few months here, essentially, okay? So yeah, I hope you get some good value out of today's video. Thanks so much for joining me. As always, I appreciate each and every one of you that subscribe to the channel. Thank you for being here. So to start out here on let's call it a humorous start here. So yesterday, I did a full video, and the main, I guess you can say, point I made in this video is that, right now is a great time to kind of fear monger out there and things like that, because it's a slow news period, recently, right? And all of a sudden, I keep hearing this voice. I'm like, I think I recognize that voice from somewhere. And I look at the screen, I'm like, some guy's wearing a baseball cap and sunglasses, some crazy sunglasses on CNBC. I'm like, what's going on? They had Kanye West on CNBC today. Kanye flipping flapjack and West? You got to be kidding me. I was like, what am I watching right now? Oh my gosh, okay. Hey, when it's a little bit slow out there, throw Kanye on. You're going to get something interesting. He was being Kanye, let's just put it that way. But yeah, that's the state of the markets right now, okay? So, alrighty, where I want to start out here is explaining the stages of a perfect market crash, okay? Now, not all crashes in the market, collapses in the market are in a perfect fashion. Some of them are very strange, the way they kind of interact, right? For instance, the February, March of 2020 crash, when the S&P 500 fell something like 34% in a matter of, what was that? Probably less than 30 trading days, which was insane, right? That was not orderly. That was just like everything just flushed massively, right? And then we had a massive kind of rebound off of that. Most crashes in the market do not happen like that. They actually go in kind of stages, essentially, okay? And how these stages go is in stage one, the first things that get taken out are the super speculative small cap stocks. That's stage one of a perfect market crash. Stage two, the high valuation mid cap stocks get hit. Stage three, the high valuation large cap stocks get hit. So think about stocks like the Zooms of the world, or maybe Teladocs or something like that, okay? Stage four, the indexes get hit. In the last stage, stage five, which is what we're currently in, safety stocks get hit, oil and gas stocks get hit, commodities get hit. It's just, if you haven't been hit at that point, you will get hit in the final stage, essentially, okay? And by the end of it, everything has gone down, and gone down considerably by that final stage, okay? Now, if we think about the stages, when did these stages start, okay? Well, stage one, that started in February of 2021. That was a period in which all those super spec stocks, the SPAC stocks, everything like that, right? All those stocks had peaked and started going down in February 2021, okay? That seems like forever ago, all right? Stage two and stage three kind of happened simultaneously, and those really started in the spring and summer of 2021. Okay, the indexes started falling in November of 2021. Those all peaked very early in that November, and then they all started going down from there. Stage five, which is what we're in currently, safety stocks, oil and gas stocks, they all started to get hit, and those started to get hit in January. But really, for the most part, it was really like summerish time, late spring into early summer is when those stocks all peaked and started to get really, really hit, pretty bad, especially in consideration to a lot of the oil and gas stocks and things like that, okay? So it's been a very orderly process on how we've gone about this whole project, essentially, okay? If you look at a day like today, you saw the Dow down 173 points, you saw the Russell down today, you saw the S&P 500 down today, you saw the NASDAQ down big today, 1.4% in regards to the NASDAQ. But you looked out there at a lot of stocks and, it wasn't like everything was red, despite the indexes being very red. Look at SDC was up 12.5% today, Win was up 7.5% today, Netflix was up over 5% today, Palantir was up about 5% today. Look at these moves. Nordstrom was up very nice. Shopify was up today. Tesla eked out a gain. Honest eked out another gain. And this is despite the market being Red Dead Redemption out there, okay? And so when you see something like this, you got to start like putting these things together and figuring out, okay, what's going on here? Why are the markets going red? And then these other stocks keep going green. Like what's going on here? And to illustrate this point a little deeper for you guys, I wanted to pull up, a chart over the past few days and kind of show you this, okay? So this shows you over the past few trading days, essentially what's happened here, okay? Honest, a small cap stock that got absolutely obliterated for a long time. Meanwhile, the market's down massively over the past few trading days, and Honest is almost up 3% over the past few trading days. Over that same amount of time, the NASDAQ is down nearly 6%. If the NASDAQ was down in a year 6%, that would be horrible, awful, okay? So the fact that in a matter of a few trading days, the NASDAQ's down nearly 6% is very telling, while Honest is up almost 3% in that same amount of time. Palantir has actually eked out a gain in that same amount of time. Isn't that fascinating that this stock could eke out a gain? I mean, traditionally, the way you think about this is if the NASDAQ's down nearly 6%, the market's getting obliterated, Palantir, Honest, stocks like that are going to get hit way harder. And I mean way harder than whatever the market gets hit. But that's not what's playing out anymore at this stage of time. The Chef, it used to be if the NASDAQ was down nearly 6%, the Chef was going to be down like 12, 15, 20%, like some insane number, okay? The Chef's down 1%. 1% in that same amount of time. Fubo's up 3.5% in the same amount of time that the NASDAQ's down nearly 6%. Back before, if the NASDAQ was down 6%, Fubo would have been down like 600%. Like, what is going on here, okay? This is the final stages of a crash, and this is what the final stages look like. Netflix is down 0.5%. It's performed 10x better than the NASDAQ has performed in the same amount of time, right? That's fascinating, absolutely fascinating. Meanwhile, commodities are getting leveled. Natural gas today was down 8.6%. That's awful. Lumber is down a massive almost 7% here today. WTI down big today, 5%. I love this, by the way. Crush these commodities. And as the economy continues to have questions, the commodities will continue to get crushed, okay? And that's why the bears have made a very bad bet in this situation, okay? Well, I don't want to say all the bears, okay? But there's definitely a certain amount of bears out there that have been, placing bets for the last few months, and Wall Streeters who've been placing bets on oil and gas stocks over the past few months. And it's like, these same people are very, very bearish on the economy. They think oil is going up. You haven't read a history book. It's not the way this works. It's never been the way this works. It's not going to be the way this works. If the economy continues to deteriorate, oil and gas is going to continue to be in a worse and worse spot, and it will continue to go down. That's what happens. That's what's always happened. That's what happens in these sort of cycles. And if you feel like the economy is going to do good, okay, and in that environment, oil and gas has a chance. If you feel like the economy is going to be strong, stocks are going to be strong, real estate is going to be strong, okay, that gives oil and gas a chance. But then why are you bearish, right? That doesn't make any sense. But, people just, I don't think they think about these things before they do it sometimes. But anyways, their decisions are their decisions, okay? Adobe got absolutely obliterated today. That stock way underperformed everything. That stock was down nearly 17% here today, okay? Now, in regards to Adobe, basically the news that came out in regards to Adobe is they're going to do a big acquisition, about a $20 billion acquisition, okay? Now, I have somebody that's a friend of mine who knows Adobe like the back of their hand, okay? And what they told me is, what they've told me traditionally in regards to Adobe is this is a big tech company that everything they've ever done that's special pretty much in the company, they've acquired over time, okay? So they're spending $20 billion on this company. A lot of shareholders don't like it, but I think it's tough to question that company when basically that whole company's been built off the back of successful acquisitions over time. But here's the deal. Adobe today is trading at $140 billion market cap roughly, right? And if Adobe's trading like that, and they're doing a $20 billion acquisition. It's seen as a transformational acquisition for the company when you're talking about that big of a dollar amount. And shareholders have a lot of questions. If this is really what? I don't personally own Adobe stock, but if this baby keeps falling, which it very much well could, if the market continues to deteriorate over the next couple months, and there's all this pessimism about spending $20 billion in a weak environment, we're in a very weak environment. If you should be getting anything for like pennies on the dollar right now, right? Everything's gotten worse, stocks, real estate, everything. And so Adobe's paying $20 billion for a company that last year was valued at $10 billion, right? So people are looking at that and like, what? What are we doing here, okay? But anyways, I'm going to keep my eye on Adobe. Adobe's a very well-run company. They've done a tremendous job over the past few decades of building that business. It's one to keep an eye on over the next few months. It's not necessarily an opportunity right now, but, over the next month or two, if this stock continues to deteriorate, I think it's interesting, okay? Now, after the bell, more bad news for the overall economy, which in the final stage, that is the stage where the economy continues to get worse and worse, essentially in the final stage of a market collapse and crash, okay? So Fedex, if you didn't see, it's down like 15% after hours. It's pulled down UPS. There's a decent probability that the whole market will be down big tomorrow based upon what Fedex said. What did Fedex say? Well, here it is, okay? So Fedex on Thursday withdrew its full year guidance and announced significant cost-cutting measures following what it called softness in the global volume shipments, basically in the global economy. Global volumes declined as macroeconomic trends significantly, it's a key word, significantly worsened later in the quarter. They could have just said as macroeconomic trends deteriorated, but they threw in that word, and believe me, all these words are thought through, and we want to make sure we put this word choice in here. It's not like these big companies, they just throw it out there. It's got to get bypassed by like 10 different individuals. Okay, the fact that they threw significantly is very telling about the state of the economy, okay, and how they view it. Worsened later in the quarter, both internationally and in the United States, said the CEO. While this performance is disappointing, we are aggressively accelerating cost reduction efforts. Oh boy. As part of these cost cut initiatives, FedEx will close 90 office locations, close 5 corporate office facilities, defer hiring efforts, and reduce flights, cancel projects. Okay. Now, if we actually look at their numbers, here's the deal. Okay. EPS is awful. 344 versus 514 was expected. For a profit machine, cash flow machine company like a FedEx, you can't come in with that. That's awful. Awful. I mean, if they would have came in with 444 when 514 was expected, that would have been a disaster. 344, game over, okay? Revenue didn't disappoint that much, in my opinion. It was down about $400 million versus expectations. I don't think that's as end of the world as at least it sounded. When they said global volumes declined as macro trends significantly worsened, I mean, I would have thought they would have missed revenue projections by like 20% or something just ridiculous, or maybe missed by $2 billion, $4 billion, something like that. I mean, a $400 million miss roughly? Yeah, for a company FedEx's size, like, yeah, I don't know, man. I don't think they should have put significantly, but, maybe they're trying to scare the big guy a little bit, and that's the big guy, okay? That's Mr. J. Powell, as he is illustrating here. This is how much tattooed chef stock he wants to own in the future, okay? Mr. J. Powell. So, things like this are going to get on his radar. Companies like FedEx are seen as the most impactful companies in the world. That a company like the Fed, if they're going to look at certain companies, they're going to look at companies like UPS and FedEx. Those companies are going to give you arguably the best outlook on the worldwide economy, but especially the U.S. economy. Okay, they're going to tell you how it is. They're going to there's no way you can have a very strong economy and those companies aren't tearing it up with their numbers. There's no way you can have a weak economy and those companies aren't being hurt, essentially, okay? Those are two of the best companies that if you want to understand what's going on in the macroeconomic landscape, pay attention to FedEx, pay attention to UPS. This is going to get on the Fed's radar. They're going to look at something like this. And to be honest, the Fed wants to see this. They need to see this. They need to see FedEx come out and miss numbers and say, hey, things have gotten a lot worse. They need the same thing from UPS as well when they report. That's what they need to say, okay? Same thing with a lot of like the rail car companies, the trucking companies. Those companies are just going to give you such a great insight on what's going on in the global economy, and especially the U.S. economy, which is what matters the most to the Fed. And so, the more they can see things like that, and then if you talk about, I don't even want to get started on when the heck inflation numbers are going to come down in any meaningful way, because at this point in time, the whole thing doesn't make sense anymore. And it didn't make sense in the past. It still doesn't make sense to this day. But, they need, if you're going to talk about them potentially not being as aggressive, and you're talking about getting to a point where they eventually cut rates, they have to see a deterioration in the economy and with company earnings like we're seeing there with FedEx, okay? Now, the next question that's going to come to everybody's mind is, okay, we're in the final stage. How long does this stage last? And where are the opportunities in this final stage, okay? We can talk about that. Let's get into that. So the final stage in a orderly market crash like we have going on, which has been very orderly, it's usually lasts anywhere from 3 to 6 months, okay? So what I expect in this is I expect the market for the rest of this year to be on very shaky ground for at least the next few months, essentially, and maybe into the very beginning of 2023. What we need to see is the economy continue to deteriorate. Companies continue to come out and say, our numbers aren't quite there. We're not hitting our numbers because the economy has gotten bad, things like that. The more we can hear that over this next quarter, the closer we are to a market bottom. The economy will not get better in a significant way until the stock market's already rallied for quite some time, okay? And this is a lesson we obviously learned. Like, if anybody that studies history, you see this play out, okay? The stock market started to rally way before the economy started to rally, in obviously late 08 and then into early 09. The NASDAQ, this chart doesn't tell it as good of it should, in my opinion. The NASDAQ actually bottomed for real, actually in October of 08. And if you pull up a more detailed chart, you'll see that, okay? This is kind of a crappy chart I pulled up here, and I apologize for that, okay? So it makes it look like the NASDAQ really bottomed in early 09, but the truth is, if you go back in history and you look at a detailed chart, you're going to actually see the NASDAQ bottomed in actually October of 08. It double bottomed in early 09, essentially, okay? So this final stage is a process that it's going to take you 3 to 6 months to kind of work through it. We're obviously I've already been in this process, so I don't think it's going to be a long game, but it is something to kind of play out here. And like I said, when it comes to a lot of the stocks that get hit at the last stage, there's a lot of the biggest cap stocks in the world. So sometimes it can make the indexes look even worse. And meanwhile, you can have certain stocks, like some of the smaller cap stocks, actually start to perform well. And if you go back to the tech bubble, for instance, okay, and you look at stocks like, let's say, for instance, Amazon, okay? Amazon bottomed way before the indexes bottomed in the tech bubble, okay? This is something very important that not a lot of people understand or even know about. So I actually wanted to pull this up for you guys. I didn't have this ready, but I think it's very important. Amazon stock in the tech bubble, right, which Amazon back then was seen as a super speculative, crazy company that I don't know about them, that was what everybody looked at Amazon was back then, okay? Amazon stock bottomed in September of 01, way before the market in general bottomed, okay? And so when you see some of these, let's call it higher valuation names and some of those sorts of stocks, not hitting new 52-week lows, not hitting new all-time lows, and have actually started to recover nicely, this is not unprecedented. We have seen this play out in history throughout time, okay? So something very important to kind of keep in mind there. Next thing we obviously got to think about is, where are the opportunities, okay? Well, so at first, the opportunities were only in small caps. Then mid caps emerged as an opportunity, okay? In the final stage of a crash, everything turns into an opportunity. It doesn't matter what you buy. You're going to make so much dang money in it, okay? And that's a stage we're going to basically get into over the next couple months, is it doesn't matter what you buy. You're going to, man, what's this fly doing? It's all over me, man. Get off me, fly. I had the doors open. It's finally nice weather here in Vegas. It's like a miracle of life, man. It's been hot for so long. It's like you finally get nice weather. You open the door, and then you got flies come in, man. And then maybe a bat flew in here one night. It's just getting crazy. But anyways, in regards to the market, None of these things are unprecedented. They've all played out like this before. And in regards to where the opportunities are at the final stage of a crash, it's everywhere. You know, if you were buying stocks in late '08 into early '09, it doesn't matter what you buy. You likely made a ton of money. If you were buying stocks in March of 2020, it didn't matter what you bought. You made a ton of money. If you were buying stocks in late 2001 and into 2002, it didn't matter what you pretty much bought. You're going to make a ton of money, okay? And if, you know, that's just the way it plays out. And so in the final stage of this crash, the whole world is yours. That's just the bottom line. It's like one of those rare opportunities you get where the whole world is yours, and you're able to just, you know, it's like shooting fish in a barrel, as they say. It's just the easiest thing in the world. So, you know, you got to take advantage of those time periods because they come around so few and far between. Markets like we've gotten this year in 2022, they come around very rare. I mean, you know, every maybe on average, every 5 to 10 years, you get one of these extraordinary opportunities where stocks across the board just get absolutely obliterated. And, you know, it doesn't matter what it is, growth, non-growth, value, everything is just, you know, gets taken out. And by the end of it, you know, these babies are all going to be taken down as well. They're one of the very few that's performed well this year. They'll all be taken out as well. So, hey, if you want to buy some oil and gas stocks, you'll get your opportunity as well. You know, not my cup of tea, but, you know, it is what it is. Hope you guys enjoyed this video. As always, I appreciate you joining me. If you're looking to join my private stock group, check out the pinned comment down there, and you'll be able to get access to, obviously, our Discord chat, which, you know, obviously has a lot of, let's just call it, valuable members. You get access to our new weekly private group investors report, which is the coolest thing I've definitely come out with in the private group in quite some time. You're going to be able to get access to all our popular chats like Palantir, SoFi, NVIDIA, AMD, Meta, Tesla, the Chef, all those, okay? And obviously you get access to all the course curriculums as well. So if you're looking to join us in there, check out the pinned comment to apply. Much love as always, and have a great day.